Time for Options Corner. As promised, lead market technician Rick Ducat's joined us, and we're talking Alphabet. As I said before the break, Rick, best performing Magnificent Seven name in 2025, assuming something dramatic doesn't happen in the next half hour or so. But what else is on your mind here? I mean, there's always so much to explore here with this giant conglomerate that is Alphabet.
Yeah, really hard to even fully define the scope and scale of everything they do, but obviously the outperformer versus the S&P 500 and its own communications sector. But when we also look at the Mag 7, as you said, Alex, the best performer of even this much lauded group as well, up 65 and some percent here during the past year versus the Mag 7 up almost 18%. And you know what we saw today was Citizens raising the firm's price target on Google to 385 from 340. They kept their outperform rating. Basically, they just reevaluated the valuation framework for this name here. Strength in the company's search business, the idea that they can further accelerate the revenue from this whole search space here, and also just Gemini, Cloud, Waymo, etc. As I said, so many things it's hard to nail down, but a more positive look.
Yeah, and as we look at Alphabet and we zoom in on its technicals specifically, I'm sure it's been a nice looking chart, but has the weakness of the last couple weeks done anything to derail this uptrend?
There was a couple sessions that were looking a bit more perilous here. So what we had was a rising wedge type shape here for the past few months here. We ultimately topped out 328.83 right here. That's our high water mark. But we also could look here right around 306. That was the high point that we had before our gap up. That's not actually where the gap began, but pretty close here. That was around where we hung on in terms of closing prices. We did have one pretty large intraday dip, but now that could give us this channel type shape to watch. It looks like we could even be perhaps breaking out to the upside from this short-term pattern. If we were to look at our moving averages here, our weekly and monthly exponential moving averages here, blue and teal, 25 and 21-day EMAs respectively, pretty close together, right around 309 to 313 or so, confluence to the downside there. Also, our old resistance line coming together right in that same area could be a supportive point to watch. RSI also had a bit of a breakout here. We pushed beyond that downward sloping trend line, but no big surge to the upside quite yet. Finally, when we look at our volume profile study, the nodes of interest, the heavy trading areas, the spikes on our blue histogram here, come in here and here and here. So roughly around 320, 300, and 270, 280 or so. Those are the heavy trading areas. Those are the points to watch. Is this just a bull flag, bull pennant type of activity here, or are we starting to really lose some steam?
Yeah, at the very least, starting to consolidate at these upper price levels, some acceptance perhaps of the market for the new, I guess, financial story that is all things Alphabet. But this is Options Corner after all. So as promised, I'll look at some of the key options activity and levels that stood out to you.
Yeah, so if we were to look at January 16th, that's our most important options expiration date here. It represents about almost a third of the total open interest, about 1 million contracts of open interest here. It was also the second most active in terms of volume today here, about 15%. Notice that our orange box here, plus or minus 4.4% move during these 16 days or so, it lines up pretty closely with our recent relative low point and those all-time highs. So that seems like that's kind of the thinking behind that expected move framework here. In terms of the most important open interest strikes, the 350 calls and the 300 puts are the most activity. That's near the current prices here, but overall a lighter day as we draw down this year. A sizzle 0.9, so about 90% of typical volume for the past 5 days.
Yeah, what stands out to me too is you of course have these boxes representing sort of that one standard deviation of volatility. Basically says it's not unreasonable for us to kind of retest that upper end of the range if things just kind of went a little bit more positive in just that first couple weeks of the year. So certainly a nice year for Alphabet in 2025, but perhaps even better one in store in 26. But any big trades stand out?
There were some big trades. The most interesting one that I thought was a strangle, not the most common type of trade you see, but plus 1,300 March 20th, 280, 325. So buying both the calls and buying the puts here. 280, 325 strangle for a $2.9 million debit, almost $2.9 million. So they seem to be both opening trades. They were done as a spread. The calls were opening for sure. The puts, not 100% sure. But basically, the lower end of that range, the break-even point, 260, number one open interest strike, as I said here, and the number three strike for the January 16th puts. So that 260 level really stands out from many perspectives here.
Yeah, and one of the names that I think could be rightly called a liquidity sponge, given its market cap and depth of market as well. So fascinating stuff. Rick Ducat, appreciate all your help in 2025. We wish you a happy new year and look forward to doing it again in 2026.